Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Timberland Investments, growing wealth with sustainable forest assets. Timberland Investments put your money to work in managed forests, where trees are grown and harvested just like other crops. These investments offer a unique mix of steady returns, real asset ownership, and a strong focus on sustainability. Many investors are turning to Timberland now because it balances risk and reward better than most stocks or bonds. Over the past decades, Timberland has shown returns that often outpace traditional markets, with far less drama during downturns. Buying into managed forests means you hold an asset that grows year after year, literally, while helping meet growing demand for sustainable raw materials. This video breaks down why Timberland is drawing fresh attention, how it stacks up against other investments, and what to consider if you want to add some green to your portfolio. Types of Timberland investments. There are several ways to invest in Timberland, each with its pros and cons. Picking the right path depends on your capital, experience, and how hands-on you want to be. Direct ownership. This approach means you, or a group you join, buy the land and trees outright. You call the shots, picking which trees to harvest, when to replant, and how to manage the forest. Direct ownership takes more money and some know-how in forest management, but you keep all profits and all the responsibility. Timberland Investment Management Organizations. TIMOs pool investor money to buy and manage large forests. They handle acquisitions, sales, and land management, making it hassle-free for investors. TIMOs are usually targeted at institutions or high-net-worth individuals, but sometimes offer options for smaller investors through third-party funds. Real estate investment trusts. Timberland, REITs, trade like stocks and let regular investors buy into big portfolios of timberland. They pay dividends from selling timber, land, and related assets. With REITs, you get much more liquidity and less paperwork than direct ownership, but not the same hands-on control. These choices give everyone from solo investors to public pension funds a way in. Geographic considerations. Where you buy matters just as much as what you buy. Geography affects timber growth rates, wood markets, risks like pests or wildfires, and long-term profits. Key timberland investment regions include U.S. South. This is the heart of U.S. timberland. Pine grows fast here, and the region is known for steady returns and easy access to mills, ports, and infrastructure. Many institutional investors prefer this area for reliability. Pacific Northwest. Here, Douglas fir and western hemlock forest offer premium wood for construction. Growth is slower versus the South, but wood is worth more. The climate can boost yields, but wildfires and regulatory issues require attention. Latin America. Countries like Brazil, Chile, and Uruguay offer quick-growing eucalyptus and pine plantations. Costs can be lower, growth rates are high, and export markets are active. But legal, political, and currency risks come with the territory. Oceania. Australia and New Zealand grow radiata pine and eucalyptus for export to Asia. These regions are known for efficient timber industries, but face their own climate and market risks. Knowing the region helps gauge potential returns and the practical risks of a timberland investment. Unique characteristics of timberland investments. Timberland isn't like stocks or bonds. It has quirks that set it apart. These differences can make it attractive for a portfolio, especially when markets swing. Biological growth. Trees grow on their own, rain or shine. Each year adds more wood, like slow-growing savings. They gain value over time even if prices stay flat. You don't have to rely only on rising wood prices to profit. Harvest flexibility. Timberland lets owners wait for a better market, holding off harvests if prices drop. If prices rise, a landowner can sell more wood. This simple flexibility can cushion returns and smooth out the ride. Non-correlation with traditional assets. Timber prices usually move differently from stocks and bonds. When markets fall, timberland tends to hold steady, which can help balance risk in your portfolio. Wood demand doesn't follow Wall Street's ups and downs. Together, these features make timberland a sturdy, unique option if you're looking to mix up your portfolio with something that grows value from the ground up. Financial benefits and risks of timberland investments. Timberland investments offer a mix of steady growth and real risks. While the promise of trees growing in value year after year sounds simple, the money you make or lose depends on more than just watching trees get taller. Let's break down how these forests actually build wealth, what can put returns at risk, and how timberland stacks up against other real asset options like farmland and infrastructure. Performance and return drivers. Timberland is powered by three main return drivers. Biological growth. Trees get bigger every year, adding real, measurable value. Even when markets are slow, your trees keep growing. Think of it as slow, steady compounding. Land appreciation. The value of the land itself often rises. As forests shrink worldwide and demand for land rises, timberland typically follows upward trends similar to real estate. Product prices. Timber is a global commodity. Lumber, pulp, and biomass prices matter. When prices spike, so do your returns if you harvest at the right time. Looking at history, timberland has posted strong returns. Since the late 1980s, U.S. timberland investments have returned about 7 to 9% annually, depending on the region and strategy. These returns come with lower volatility than stocks and often outperform bonds. Key reasons for this steady ride include flexible harvest timing and the fact that trees grow regardless of market swings. Risk factors to consider. No investment is bulletproof, and timberland has its share of risks. Market volatility. Wood prices can swing due to housing demand, global trade, and unexpected economic shocks. While trees keep growing, profits can stall if you're forced to sell during a slump. Fire and disease. Wildfires, pests, and diseases can wipe out large areas quickly. Even the best managed forests face threats from nature. Climate change. Drought, storms, and unpredictable weather can slow tree growth or damage stands. Shifting climate zones might also affect species mixes and timberland productivity. Regulatory changes. Rules about harvesting, land use, and environmental standards can shift, sometimes overnight. New policies can limit harvests or boost costs, impacting returns. Operational risks. Managing forests takes expertise. Harvest timing, replanting, and thinning need to be done right. Poor management can cut yields and raise costs. Smart investors spread their risk by diversifying across regions, tree species, and management strategies. Insurance, updated management practices, and careful due diligence help keep surprises to a minimum. Comparing timberland to other alternative investments. Let's see how timberland matches up with other real asset options. Returns and volatility. Timberland and farmland deliver steady, inflation-beating returns over time, usually with less drama than stocks or traditional real estate. Both see value boosted by biological growth. Crops or timber. Infrastructure, like roads and utilities, can offer higher returns but with more risk from politics and project challenges. Liquidity. Timberland and farmland are not easy to buy and sell quickly. Deals can take months. Timberland REITs add some liquidity, letting you trade shares easily. Infrastructure investments, especially direct ones, can also be tough to exit fast. Correlation. Timberland and farmland often move independently from stocks and bonds, which means they can help smooth a choppy portfolio. When you compare them, timberland stands out for its unique mix of low volatility, dependable returns, and real asset growth that doesn't follow the stock market. That said, It ties up cash and requires patience. Trees don't care about your time horizon. For those looking to diversify away from Wall Street swings and own something that literally grows back, Timberland holds strong appeal. Environmental and social impact. Timberland investments aren't just about steady returns. They offer real opportunities to protect the planet and support people. With smart management, Timberland becomes a tool for conservation, healthy forests, and climate solutions, all while meeting growing expectations for responsible investing, sustainability, and conservation opportunities. Timberland management has moved far beyond old-school logging. Today, responsible owners use science-backed techniques to grow, harvest, and regrow forests in ways that benefit both investors and the environment. Sustainable forestry practices. Timberland investments often use selective harvesting, regular replanting, and careful planning to promote healthy soil, protect waterways, and keep habitats intact. Stay tuned for Part 2, where we'll dive even deeper into the specifics of how to get started with sustainable forestry investments and the benefits they bring. Don't miss it. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.